Good afternoon, everybody. Welcome to the recap. I am Laz. And as I said earlier this morning in the recap, I'm filling in the Red Dog who's running the Boston Marathon. And we are wishing you lots of luck. Lord knows I couldn't do that. There's only one Red Dog, and we're thinking of you this weekend. So good luck, Scott. Earnings season. We started yesterday, Alcoa, JP Morgan, and Google. Let's just jump right into it because if this is what the market's going to give us for earnings season, be careful because we're starting out with not so much of a bang here, more of an implosion. So let's just hop right to it. You know, a lot of eyeballs on these symbols. We'll look at Google first. I talked about Google in the morning call this morning, and I said, on the much more macro landscape, for those of you that, saw the morning call, this is a weekly of Google, and this goes back a few years. And every time we hit this upper band, you can see this upper trend line, it seems to be we sell off pretty aggressively. So Google's having a lot of trouble really finding higher ground, and the 650 area plus or minus could be another area for the shorts or the bears to step in. And if today was any indication, we'll look at the daily here, make it nice and big here. This is Google today getting hit with the ugly stick, big volume, huge sell-off, all the way back down to the lows from that pre-earnings run. So the market, telling us something about the reaction here to these earnings. And obviously, even though they beat and it looked good on paper, what the market tells us is a much more significant story and one that we need to pay a lot closer attention to. Right from the get-go, the stock sold off from the opening bell, and there was no looking back, closing just a hair off the low of the day. The lows were, you could see, again, first 10 minutes of the day, huge selling. Saw a low come in right around 620, 623. We held that for the better part of the day, but there was just no buying here. We saw one, little short bounce back, but again, at the end of the day, market just pushing it right back to the lows. So, we need to respect the fact that this is technical damage, big engulfing bar, big volume. A little more time, you'll have some more color about what else to do there. JP Morgan, again, big bank, very widely watched, big institutionally owned symbol. Big sell-off today, on some pretty above average volume. And again, something that we need to consider. Little, 2-bar snapback, and the market just, pushed it right back lower. We said that some of these things were primed in the morning call for possibly some downside. As we saw an initial sell-off, into these lows from a few days back, roughly a 50% retracement, and then boom, sellers right back in action with the market. We look at the S&Ps, take the S&Ps, same price action, almost identical to JP. Now, obviously, it didn't have the catalyst. It's the general, obviously the index doesn't have earnings, but 2-bar snapback into these declining averages. You can see my shorter term moving averages, my 8 and my 21 EMA, bouncing right into there and just immediate rejection off of what are now downsloping averages. We said earlier in the morning call, this is the first time in a while that we've seen a real change in composure here. Every time we've pulled back in the market, we've pretty much reflexed all the way back to new highs, or these averages, you can see these red and blue lines, have held as areas of support, making, higher lows along the way. Well, this looks to me like it has definitively changed, and we have a new line in the sand here, around, in the S&Ps at 1388, 1390. And I do suspect that this is going to see some follow through to the downside. The first area of, bigger support is down here around 1340. So that's probably where this market's heading in the next few sessions. And we need to keep our eyes on how it reacts at that level. Let's talk about some other, obviously big cap symbols. Apple, another one that we cover here, constantly because it needs to be monitored. It's a widely watched, heavily owned, industry leading stock. Selling today. Saw some, little precursor there. We saw, 2 or 3 days of some, relative weakness as the market snapped back the last 2 sessions. I said this morning, Apple closing on its lows. So that composure, the composure change kind of set itself up yesterday and the day before. And today, that selling increased down to our 21 EMA. we could see a little lower, possibly into the 594, 595 area, maybe early Monday. We could see a little more follow through to this downside. And if we look at the hourly chart, this is really where the band of support is, down here in the low 600s, and we usually overshoot that support. Keep an eye here on that 200 EMA on the hourly. I suspect you might see a little bit of a reflex trade off there. It's the mid 590 level. We'll evaluate come Monday. But this to me, selling off pretty impulsively this morning. The hourly chart just kind of sat on the lows all day until the very end of the day. The averages caught up to the price of the stock and pushed us lower. That's usually a signal of lower prices to come. So let's address come Monday morning. So lots of different characteristics. We haven't really been talking about selling for the better part of a few months. There are some shining stars though. We look at Starbucks. Starbucks on the daily chart today. No stopping Starbucks. Ren, I know Scott had pointed this out. We had this off the charts last week as a breakout play above $6. Now trading $7.33. So, like I said in this morning's morning call, there are opportunities that are for both types of traders. There are some very, very nimble longs that are still out there, stocks that are still, just showing great relative strength, great composure, even breaking out as the market's selling off, which is, not very, you don't see that too often. And then you have, another handful of stocks that were former, high-flying stocks, Apple, Priceline, Google, these types of names, starting to really take it on the chin a little bit, and you're starting to see pullbacks. I think a good, healthy exercise for those of you that are, really permabulls or really, really believe in the bullish story here is look at some of your weekly charts. And I think Apple's a good way to, just a good exercise. If we look at the weekly here of Apple, we've gone up for the better part of 6 months. Really haven't printed a red bar for some small, action. But for the better part of, 12 to 16 weeks, you see nothing but buying. The further they stretch these, this market, stocks off these EMAs, the harder they draw down. So it wouldn't surprise me here if you saw a 3-week to even a 5-week pullback. Your 8 period is down here at 575 and your 21 period is down here at 508. Technically speaking, if we look at retracements, where this, Apple, particular came from, even if it pulled back 38%, that's still a relatively healthy corrective type of action for those of you that have a longer term, strategy going here. So there could be some shorter term selling within this longer term uptrend. So that wouldn't really surprise me. So 1 down day or 2 down days shouldn't really, you shouldn't, what I'm trying to say without saying is, if you're trying to bottom pick, you might still be very, very early here. As this potentially, if we look at the daily, we have some unfilled gaps down here. If you look to the left, down around 560, 565, there's some open holes in this chart that might, this stock might draw down and try and fill some of those holes. And then, earnings may come out and you might see some more upside. So just be nimble here. 1 down day doesn't mean you should be a new buyer. I think that mentality, you got to keep that at bay. A lot of subscribers in the VTF today in the chat room, were trying to just wet their whistle to stick their neck out and be long. And I think that right now, with the composure of the market, the fact that we actually have got a moving average cross here. We saw some selling today. Some of the high beta stocks starting to push down a little bit. Starting to see some selling step in on bounces. Keep that aggression and that impulse to want to be long and want to buy every down day at bay, because I think this might last, for a few weeks. And the fact that we now go into earnings season and JP, big down day, and Google, big red bar, and, some of these earning plays not really getting bought, just keep that in the back of your mind in terms of, mitigating and managing risk. As a professional active trader, your job is to manage risk. And if you're trading and making impulsive decisions because of 1 day, you're probably doing yourself a disservice in terms of managing that risk appropriately. The market's been on an upshoot for the better part of 4 or 5 months. A couple weeks of selling probably isn't uncalled for and isn't unhealthy if the longer term trend really truly is going to remain intact. The market's probably going to pull back. Again, let's look at some of the weekly charts here as the S&Ps. We could pull down a little to that 133 area, even potentially lower here, and have this trend still remain very much intact. So be patient. I think a healthy trader is a patient trader. A successful trader is a patient trader. Don't make decisions based on one day or 2 days of selling. I think that's probably not a smart thing to do. Looking at some other symbols today, and again we'll look at some of the high flyers. CMG, this is a weekly. CMG, one of those stocks bucking the trend. Intuitive Surgical, ISRG, still sitting at highs, not much real technical damage here. The trend still very much remain intact. Priceline, saw some heavy selling days. 2 days looking to me like it's trying to bear flag in here. I would keep an eye on this lower band if it takes out this lower trend line. Come into early next week, you could see another thrust trade down, possibly into this 21-day EMA, which is right around the low 700s. So we could see another haircut there early in the next week. Lulu, another high-flying symbol that's had a really, really remarkable run over the last few months. Starting to decay in here. Again, impulsive down day, big red bar, very low volume retracement over the last couple of days. That's usually a sign that might be some lower prices in the not too distant future. So keep a couple symbols on your radar. Have a few shorts ready to go. If the market does want to go down, you're prepared, you're ready. You have some, cute little short trades that, you possibly can make some cash flow with. And then let this market sort of do what it's going to do. And if it's going to set back up as a bullish scenario, it's going to give you an opportunity to participate. It's not just going to leave the gate without you and go right back to new highs. I just don't see that trade happening right now. And I think if you're a rational thinking, astute technician, someone who's studying the movement of price, you probably already know that. So I'm rehashing what could be the obvious already. I know Scott said IBD put us in a correction a week or so ago, and the market's sort of following through here a little bit on that downside. And I do think the market could probe a little lower to the downside early into next week. So we'll see what happens. So that's really where we're at here. It's been an interesting week trading. Haven't seen selling in quite some time. Selling definitely was on the tape this week, and I suspect you might see it follow through. Remember, selling can be a very impulsive, panic type trade. So make sure you understand if you're going to step into this type of market, what you're essentially dealing with. It is a jungle out there. I'm going to let my man Parker in the booth send us out with something good for the weekend. Little Bruce. With that, it is a jungle land out there. Have a great weekend. I'll talk to you on the VTF on Monday and the morning call on Monday. Take care.
The Rangers had a homecoming in Harlem late last night. And the Magic Rat drove his sleek machine over the Jersey state line. Barefoot girl sitting on the hood of a Dodge, drinking warm.